G'day everyone. This is Rangadad, not financial advice, just the way I'm looking at the market. Yeah, been a strange weekend. Obviously we had the ETH hack from Bybit on Friday US time, Saturday morning my time. It's thrown a bit of a spanner into the works, but I think the bigger thing we've got to be careful of is the general stock market. So anyway, we'll start with liquidity levels. Quite a bit of long liquidity coming into the charts. Down to around 94.3, which I think's basically people long the low or using the low as their stop out on their longs. So there is quite a bit of short liquidity coming into the charts just in the last 12 hours or 24 hours, I guess. So that's interesting to me as well, because there are some good levels up around the high 97s for some vector candle recovery and things like that. So just want to have a quick look at the weekly. We'll zoom out and see where the bigger levels are. So yeah, I mean, this move up, if we actually had a look at the longer time frame on the monthly, that was a key level that I had pointed out previously. Just there was a lot of short liquidity sitting in there. So lo and behold, we hit that. Bybit got hacked, dropped like a stone. It's funny how the news kind of reflects key levels a lot of the time. Just like Tesla hit a key level to the downside, and then an announcement came out that they got a big government contract and it bounced. So show me the charts and I'll tell you the news, I guess. So looking at this, there is quite a bit to the upside still. Like that's fairly heavy through there. It's just, it's not looking super strong. There was a good bounce though. So just because there are quite a few quite large short liquidation levels in here, a bit of a higher bounce could be expected here. Like potentially there's vector candles in here to be recovered as well, up to that 97, like 97,800-ish is not a bad level for a bounce. I just don't know that it'll get through that. This is kind of a nothing level. That's my only concern. We have had two decent bottoming signals here. That one's not as good a bottoming signal as I would like, but this one is actually starting to look more like a bottoming signal. Interestingly too, we have CVD on perps on Binance, so cumulative volume delta. It did make a low here, and we have been grinding up higher low here, just like price action. So that's not a bad sign. Open interest through this area here as price was coming down was increasing quite significantly as well. So, you know, this looks like it should be a decent bounce. It's just whether we can get through the 200 and the 800 EMA. The 200 seems to be a key level, but at the same time, that was smack bang 200 and 800 at the same time. And yeah, look, drops. One of the things I said to someone recently was it feels like the start of the bear market, end of 2021. And that is like we had a couple of news announcements, and I think it was like some of the I don't remember their name now, but guys going bankrupt and stuff, causing lots of people to lose crypto. That sort of started after we'd already dropped a little bit on the charts. And if we start seeing more of that or more hacks or anything like that, then things could drop quite quickly. So just be careful of that. This year in particular, just have one foot out the door. Be prepared to cut losses. Sentiment. So dumb money sentiment is dropping. Smart money is buying the dip though. So there's still a lot to go on smart money though. So this dip could be a big dip. So just be aware of that. These guys, once they stop buying, that's probably when you're going to be getting pretty close to the bottom. Okay. At this stage, it just looks like smart money's getting ready to buy in. Now, this is an interesting one too. So obviously this 90-day range here has seen a lot of price action. There has been some dip buying. We're still getting some dip buying, but the amount of transactions, the amount of volume that was going on up above through this range, through the highs, we still haven't seen that as money's not coming back in at the same rate. Now, if we come just to the last 7 days, there is some, actually let's change that to 10. So there is some dip buying. On each of these dips, there has been a bit of buying, but it's still nowhere near the volumes that you would expect if we were going to rip to a new all-time high. As long as all that money that went out of the system at the highs is still out, then like bounces are probably just going to be relatively short-lived. What you don't want to see is similar sized trades up in this area here, up in the 56-ish or 55, 8-ish, 55, 7-ish. If you see the same sort of trades in there, then that's not going to be ideal. I'd be expecting pullback. But yeah, dark pool activity right at the lows. That's not a bad sign for continuation of a bounce here, though. It's just probably relatively short-lived. Coinbase got some bids at the bottom here as well, but again, I think these guys are just dollar cost averaging in on the dips. Reasonable size, just yeah, be careful. They haven't, like that actually looks like an exit. Swept the low there, and that actually looks like an exit of that same trade. 50,000 shares, 46,000 shares. So they're probably sitting on the rest of those shares thinking, okay, it doesn't owe me anything now. Yeah, I think I'd like to see a bid come in on the 2x Coinbase ETF. Mara got a bit of a buy at the bottom there as well. Yeah, nothing massive. So consumer staples. Interestingly, it got pretty big order at the top there. We have been using consumer staples to sort of suggest that rotation into safety is happening. Now, consumer staples will still drop. If everything drops, consumer staples will still likely drop. Energy got some interesting bids down here though too. So energy can be a little bit of a defensive play sometimes, but utilities is still grinding up. Again, another defensive play. Whereas XLY, consumer discretionary, has been hammered over the last week. So little bit here, but nothing major. You want to see big bids coming through at those lows. All right, so I covered that. Again, lots of green on the bid-ask delta, so lots of bids coming through as we were dipping down here. Already it started to turn red though, so be a little bit careful there. As we were pointing out through this area here too, there was a lot of red on the bid-ask delta. So it's just whether we're done here or not. Certainly not going up aggressively. And CoinGlass is actually suggesting aggregated spot volume and futures volume is actually making a lower low compared to price action. So not ideal. Spots kind of flattened off. Futures is ticking up a little bit, but yeah, I wouldn't say that's a particularly encouraging read, put it that way. Just be careful with weekends still though too. Market likes to move, particularly on a Sunday night, US time, can move either way. All right, into the charts. So Bitcoin at the moment, this point of control, this trade volume in this area is just, it's just holding price in this range. We do obviously have a bit more of that daily vector candle that we could recover to the upside. Just interesting to note here that the point of control is at around 96,400. Suggest if in the next 4 hours or so, if we actually get back above that, that'll look like a pretty nice buy up, and we could actually come up to the value area higher. Thing is, like on the daily, BBWP is fully reset. Momentum is to the downside, but we're sitting right in the middle. So this could switch one daily candle. This could switch to the upside, but it could also accelerate to the downside. So it's not a great read from this particular chart, but the thing to note is we are back below the 13 and the 9 EMA. They still haven't crossed the upside, so can't really expect anything massive to the upside. Also with CME, so on Bybit, we're at 95,800. CME closed at 94,600. So we're about 1,200 above CME close. And CME is normally a few $100, like 300, 400 above the other exchanges. So I guess that's something to keep in mind, because if we gap up on CME, leaving a gap below here in this sort of environment could be a magnet for price. So, and CME for it broke above this little channel on the, that's a 1 hour sort of channel there, but it's squarely back within that. So you'd almost expect CME to come back down and potentially into the 92 and a half, just to retest this trend line, which has been a pretty good trend line for CME, especially on the daily. Like that's a fairly strong trend line there. Haven't closed below that trend line since 15th of Jan, so well over a month. Closures below that could lead to significant downside. The one caveat there is that with CME, the 200 EMA on the daily, 50 EMA on the daily is sitting at 89,900, which would recover most of this vector candle wick as well. So that would be a good point to bounce, somewhere around that. And honestly, it'll probably come down into the 88s on the like Bybit or Binance. But somewhere in that region is where you'll probably get a bounce. Whether that's a dead cat bounce or not, I think we'll be looking at the dark pool activity to see what's going on there. Probably the 1 hour and the 4 hour are going to be pretty critical charts for that as well. Total versus stable coins. Back in this region below this trend line. So again, for those that are new, this has been a pretty good trend line for us, particularly on the 1 hour. We've had lots of rejection off it, but this was pretty crazy too. On the Friday US time, we spiked up, like smacked into that level there and rejected off it just as the ETH hack came out and price tanked. And we came all the way back down and tagged this other trend line here. So if you're looking for, and that's a better trend line on the hourly too, by the way. Pretty well tagged that trend line. Depends where you draw it, but it looks like it tagged it on the daily. So for the time being, though, we're stuck below this particular trend line. That's the main one. That's the key one that I'm interested in. Yeah, this one here. It's an important one, but this chart here doesn't look great. The one thing that I was looking at the other day, this was going up stronger than Bitcoin was at one stage. I can't remember exactly where it was, but on the hourly, it was going up quite strongly, and Bitcoin was going sideways. I think it might have been just in here, in that region there. And it is putting in a much higher low than what Bitcoin seems to be at the moment. So we've got to just be aware of that. Breaks above these, the 13 and the 9 EMA on the hourly could lead to a pretty decent run. But again, it really seems to struggle around the 50 and the 200 EMA on the hourly. So just keep that in mind. This trend line here is probably going to provide some resistance, at least on the daily. Yeah, I think that trend line's moved on me. Fucking trading view, man. Anyway, this horizontal level is a pretty good one. Again, break above that horizontal level, and we should go on a decent run. For the time being, though, vector candle recovery on this chart. Are we going to have to come up and back up to this level to really recover those vectors? Whether we can get there or not, looking at weekend trade is tricky. But the good thing is BBWP is kind of up there, but at least momentum is starting to go to the upside again. But it could just be this too. Like we came off a quite a big low in momentum, spiked right back up into bullish control zone, and still only got like a third of the way up from that drop. So that's not particularly ideal. So yeah, a bounce here from a momentum perspective. If we do something similar, you're probably looking at another move up into here and then potentially a pullback. Now, what happens when we come back down into this sort of region? If we come back down into that region, would be interesting. The thing about all this that I'm looking at is we're still within this value area high, value area low range. Like we haven't broken to the downside, we haven't broken to the top side. That's, to me, we've been at such low volatility for so long. Whichever way Bitcoin decides to go, it's going to go hard. And that's going to bring to the downside those targets that we've had previously back into the sort of 85 level, I think. May get a bounce, probably somewhere around the 91 to 92. That's still fairly key level as well. But if we're breaking this to the downside and BBWP starts increasing on the daily, like it's fully reset, and it's, you don't often get periods that are this low for this long. Like even the ones at the bottom here before the like that was the low of the last cycle, last bear market, and even that didn't last this long. So, you know, typically we just don't see it. Don't see the daily BBWP so low for so long, even at the highs. But it's normally lower for longer at low levels. So that there's probably the closest. And that was pretty close to a fairly major drop, but that was also looking like being the low on the market before FTX came in. So, and then we had another sideways action and then broke to the upside. So coming off this, if we see price action on the daily, if we see it move above the 9 and the 13 and we see them cross coming off really low BBWP, I don't care where momentum is, it's probably going to lead to a big run. So we just got to be careful that it's not to the downside. But yeah, look, that's the big thing for me at the moment. We need a decision to be made on Bitcoin, and we just haven't got that yet. And the fact that we have been coiling for so long, it's just anyone's guess. Looking at it on a chart, you wouldn't be super excited by this, except for the fact that it is coiling. That's really it. Just with CME too. So CME is still going to have some resistance on this trend line as well if we do bounce to the upside. But if we go into normal markets, that is a pretty nasty looking candle. Could say that it's just a pullback into a trend line. There's a short-term trend through here, but yeah, that's pretty negative. Over the last week or so, we've been looking at the rotations in the market. Every sign points towards big money selling into retail. And the other thing to note is that bond spreads are at super low levels, and typically when they're at super low levels, get ready for some fireworks to the downside. So yeah, it's not looking great. Q's broke back below that trend line. That's just a nasty candle. Mondays are typically, this year in particular, I think Mondays have been mostly negative and Fridays have been mostly negative. Whereas you tend to get a peak through the middle of the week. So Wednesdays have been the most positive this year. So I'd kind of expect some continuation on Monday. It's just whether or not we actually get a bounce here to flush out some of those shorts, because a lot of people were going shorts. There was a lot of short puts on Friday. So we could get a little bounce here, which could see Bitcoin recover some of those vectors. Actually, I'll jump back into this and just show. Okay. Yeah, so above here on the 5 minute, we'll go to 15. So there's 3 levels here where we're going to potentially get resistance. That's probably going to be the strongest resistance there, to be honest. Even though it's not actually a vector on the 15 minute, it is on the 5 minute. And realistically, there's no surprise that's not a vector on the 15 minute actually. It's just because we had so much red volume through these ones. So yeah, I think 97, 900-ish, probably a little bit below that is going to be a key level, which would actually require a fairly big volatility increase from here to get to that soon. We could just grind up. Whether we make it all the way to 99, 100 again, I'd kind of be surprised, but it's certainly possible. So at the moment on the 15 minute, there is some momentum to the upside still. Rejection off the 50 EMA is not going to look good, but at the same time, if it drops from here, if it drops quickly, it'll break outside of these linear regression channel, which typically when that happens, it's a bad sign. So we had a really tight range. We had low volatility coming into that Friday session. And then, yeah, we broke down, and we still haven't actually, after that breakdown, we didn't actually recover this vector in here either, around 94, 200. So at the moment, I don't know. Yeah, there is some buying volume coming through on the dips, but I'm not convinced yet that we're out of the woods. So yeah, just be careful. I would say it's not the worst time to buy Bitcoin, but I'm not doing it at the moment. I actually sold out of all my long-term BTC holdings in my super account. So interesting. Forget he's actually come up with a strategy on this thing that that would have been in profit. So got to try and program that one in. Yeah, back to Stonks. This is an interesting level for a bounce on the equal weight, but just looking at that momentum, at least there's no bearish divergence on momentum here, but it doesn't have to either. So, and again, it came pretty close to this trend line, which isn't a bad one. Need to see something pretty major happen for a turnaround and a bounce to new highs on the stock market. The thing is, global liquidity has ticked back to the upside too as of Friday. So got to keep that in mind. I wouldn't say it's necessarily going to hold up the market, because for those that have tuned in the past, global liquidity peaked back in here. And typically, like, global liquidity has led the previous runs. This is the first run where we haven't, like, first moved to the upside, where we've made new all-time highs on the S&P 500 and NASDAQ, but we haven't made new all-time highs on global liquidity. And that chart goes back to basically 2012. I think it does go back a little bit further than that, but yeah, every single run has been led by a bounce in global liquidity. Every single decent run anyway. So that still concerns me. The fact that we have bounced here though is kind of weird. Yeah, there's quite a few things that are not lining up still at the moment, apart from to say that the amount of selling that we've seen across the top by the big guys through here, and it just suggests we're going to be on a bigger pullback. S&P 500, I want to see it touch this 200 EMA on the daily at some stage this year. Normally it happens in the first quarter if we haven't touched it in the previous year. So there's only about a month left on that, but if we continue down, then that's a pretty easy target for it. I think somewhere around the 5,700. May actually sweep a bit lower than that. If we look at, sorry, just grab my, screw it, I'll just use that. That's still only a 7% drop. I actually think it'll probably go past that. If we continue to drop and we don't respect this trend line, then somewhere around 5,300 is actually possible. Yeah. ES1, so the mini futures, that's an interesting level to stop, isn't it? Break below that particular trend line. I think that is a reasonably long term one too. Yeah. Again, pull up and a retest of this trend line and a breakdown below that is probably going to lead to a pretty big downside. It's just, is this the big one? Is it? See, lower high on equal weight S&P 500 wouldn't be good either. Momentum's to the downside, BBWP is increasing, been in this range for a while. What would be interesting is if we spike down here and then bounce. Just bounce off that 200 EMA on the daily, because that would potentially be a max pain sort of Wyckoff fake out to the downside. Yeah, that's probably not the way I'm leaning at the moment, but it's possible. Wow, interesting stop on that too. So IWM, yeah, needs to hold this channel, and it could do, but again, the markets don't necessarily look like they want to do that. BBWP's spiked, momentum's to the downside. Could find ourselves around 190 pretty quickly. And typically the last 2 weeks in Feb are normally negative weeks. Or there is a pullback in that time. So March may still get a run up. It's just this year, I think it's going to be different to a lot of years. XLI's back again within this little channel. Bounces here are possible though. Like typically you don't leave vectors for very long on the daily. XLY, XLP. Okay, this, So this was one of the ones that I was using to suggest downside is pretty likely. That is a massive drop. So people are moving out of consumer discretionary pretty hard at the moment. It's probably got a little bit more to come too, although it has hit that first target there. So we can remove that. I guess what I would want to see to suggest an overall market recovery is actually probably breaking this sort of trend line here. But it doesn't, obviously there's no real sign of a turnaround yet. BBWP is increasing, momentum's to the downside and in the bearish control zone. So yeah, bias is still to the downside at the moment. Wow, that's pointed this out the other day too. So XLP versus SPY. Yeah, broke out of that resistance level. It hit it twice straight through. We may get a pullback and a retest. But that's a pretty major break, and it should lead to further downside on the markets. So XLP may come down, but not necessarily as much as what the SPY will come down. Yeah, I guess hitting this trend line here is probably going to see a pretty decent bounce. That could be a 10% sort of correction on the S&P 500. What the? Oh, dude. Fucking trading. Seriously. What we don't want to see is breaks above this trend line, this secondary one here. That will suggest we're going deeper. Because yeah, we haven't been at levels on this comparison this low since ever. That was like that level that we just broke through was the bottom of the .com. So that was the peak of the .com boom. And we were below that. And that's what happened after it broke its pattern, broke back to the upside. So that there to me is probably the biggest suggestion that we're gonna struggle pretty hard. At the moment though, all we've really done is this first little breakout, something similar. So we've broken above and we could pull back. So the S&P could still go sort of sideways or have a little bounce in here. And it's been pretty similar in that we've kind of gone sideways for a bit. But yeah, the S&P tanked pretty hard at that point. 10% correction on that. Again, it's still like we still could get another all-time high this year. As you can see here, once it hits these peaks, there's uncertainty in markets. There's a lot of choppiness, a lot of sideways action. This year is supposed to be a sideways kind of year, choppy year. It's the third year of a bull run. They're typically sideways and choppy on S&P. So all I'm saying is this is probably pretty close to the peak, and don't expect any major upside on S&P 500. Could get small new all-time highs. We could get a blow off top if something happens, but you know, this sort of breakout from a level that was lower than the .com boom typically isn't a great sign for the economy for the next I don't know, 10 years. Equal weight XLY versus XLP got absolutely decimated. Was a hint of that happening on the Thursday. Where to next? Again, might get a little bounce here. Just it was a pretty flat sort of area, but probably you could potentially say, okay, that's your next level there, which would be a pretty good horizontal level as well. But that's where we need to find some support for a bit of a bounce. Whether we do or not doesn't look particularly likely at the moment. Same with equal weight, XLY versus SPY, sorry, XLP versus SPY, equal weight. Again, it broke a key horizontal level. At the same time, it was breaking this downward trend line. So same sort of read there. It looks like it wants to keep going up. That's not going to be great for the economy in general. I think again it was new lows. I don't know how far this one goes back. Yeah, it only goes back to the GFC, but we got a lot lower than the GFC. So there's a lot. This particular chart can go a hell of a lot lower. Interesting, we had resistance there. The COVID drop, same time as the low on the 2015, 2016 drop. And that was a pretty similar level to the bottom of the markets as well. So this could go a hell of a long way. All right, turnarounds in this chart typically aren't a good thing. Breaking those downward trend lines with such force is not a good thing. So equal weight consumer staples getting bought up here. Again, defensive play, whereas consumer discretionary is coming back. KRE, so regional banking got slammed. I don't think it's even filled that gap properly yet, but I expect that to come down at least into this trend line here before we see a little bounce. But again, bounces are probably going to be met with further sell-offs. At least that's the way I'm expecting things to go, everything considered. This is the other big one. So home construction breaking that level again. This is the key level. If we break below this, and again, that's probably slipped a little bit, break below that, the economy is going to be in trouble, I think. I mean, it's already making some pretty massive moves to the downside. We filled this gap here. Again, I don't think that's all it wants on home builders. It looks like it wants to keep going. We could see a little bounce here though, like, and at the same time, the S&P 500 will bounce, things like that. But I dare say it'll find resistance off this trend line here. And if we do, then I'd say this level will be broken, and that will be a pretty major signal that top is in for the time being. Semis didn't quite fill the gap, but that could be all she wrote on semis as well. Nvidia is going to be a key one this week, I think. Just quickly jump over to that. We're talking about semis. So earnings is Wednesday after the close. That'll be interesting, actually. If Nvidia's pulling back with everything else, we've got some key levels here. The value area high, which is pretty well where they bounced to after that big gap down. If Nvidia comes down here over the next sort of 2-3 days of trade, even gets into the point of control and bounces, that could actually lead to that sort of dead cat bounce on the markets. We'll be watching pretty closely though if it does bounce and gap up, what happens around this trend line. Because if we reject off that, which funnily enough we do have another trend line coming through there roughly, then that could be like if we're rejecting that trend line again, it's going to suggest that the markets are going to be having a bigger correction. And just the fact like everything was red on Friday. This is not a great chart either. Break and retest and continuation of the downside. I'm expecting the Mag 7 to pull back another. So that from here, probably into this sort of area here at least another 6%. Tesla is probably like it played it out quicker, but it looks like it's going to do this. They pull back into this gap fill, I'd say 250. I think that's not a bad buy level for Tesla, but see Google smash through that support. Again, little pulls up into that area intraday, up into the 183s before continuation is potential. But if the market's dropping like this, if the market wants to drop further, that's not a good sign either. So in other words, the move is pretty much across everything. So percentage of stocks above their 50-day moving average dropped significantly, while most of the indices were dropping as well. So, and that's a pretty negative sign that this is market wide now. The rotation seems to be done. That was a significant sign that it was a false move to the upside. Okay, false breakout. Apple got pretty close to this level again, but just above that, which is probably where a lot of stops were sitting for shorts, and pulled back down. So even Apple looks like it could come back a bit. Where's Meta? Meta, yeah, it looks done. But again, I wouldn't be surprised if we get bounces up into that level. It could happen later in the year. Like we don't have to go straight back there. At the moment, this looks like it wants to keep going back into this trend line here. So let's put that back, extend that out. So yeah, not looking great. Airbnb closing that gap. So downside kind of looks more likely at the moment. This looks like it might be a false break on AMD as well, which if we break below that trend line, it's going into 94, I would say, somewhere around that, 94 and a half. AVGO pullback is likely to continue. SMCI is a good break to the upside, but it's probably going to pull back as well over the next couple of days. Potentially even further. This could just be a false break. TSM, yeah, it's just continuation there. Stellantis couldn't break its level. Ford still struggling. Stellantis, it's got earnings coming up soon as well. So if it breaks below this range, then yeah, it's not a great sign for the economy. Aussie markets continuing to come back. I would expect a bounce from this level. So again, another couple of days down. Monday, Tuesday down, and then a bounce. Likely a dead cat bounce, but a bounce nonetheless. Just on that Dixie. Little bounce there for Dixie, but I'd expect it to keep back a bit as well. Just with US oil, straight back into the point of control, but it's closed below that. This looks like it will actually pull back a bit further. Again, not a great sign for the economy. Gold, it's sideways. Gold, that's an interesting one. Momentum's been high for a long time. As I've said before, if the market pulls back and is dropping hard, then gold will drop as well. But I'd kind of expect gold to get a bounce from this level too. So I will be interested in just buying in a little bit more into gold at these levels because as I've said before, like whilst gold can pull back when the market peaks, key breakouts on gold near those peak levels can lead to pretty massive run. Like gold was literally just about, it broke out just as the market rolled over back in 2018. And after the COVID bottom, it didn't really look back. Oh, that wasn't even COVID bottom. That was just the 2018 bottom. Yeah, it did not look back. Gotta be a little bit careful with it, but if we go back to, where was it? Yeah, so 2008, gold really peaked March 2008, but it was coiling sideways in 2007 and it broke out of that key level in September 07 and just went on a bit of a tear. We've sort of been doing something reasonably similar, not huge, but really the breakout of this previous year or so led to another 45% run on gold. And when the GFC really started, March 08, well, typically it actually started a bit before that, but it did pull back when the market was pulling back really hard, but it also bounced and actually led the market out. So it's not a bad one to look at some key levels, and it never like broke back within this range, the breakout range. So it's kind of why I'm looking at gold as potentially, gold could potentially come back into this support level. But this sort of environment could also get a bounce in around this area. See what happens with price action around there. A better level is probably going to be realistically into this level here. I'm just going to move this up. I don't think it'll get back into that. This is probably a better region for a buy, somewhere in here. Anyway, I've sold out of this, so I'll keep an eye on it. 2-year and the 10-year yields are pulling back still as well. Typically, that's a good thing for gold, but at this stage, when the market goes crazy, it's not necessarily aligned. High yield junk is still quite high. That's kind of surprising. Didn't pull back anywhere near as much. If high yield junk gets a bounce from here, it could be a massive fake out from the market. TLT is getting a buy though. Obviously, as yields are coming down, and they're sideways at the moment. Break below sort of 4.16 on the 2-year. Closure below Friday's level on the 10-year is probably going to lead to more downside, plus TLT will probably go up more. This is more supportive of a bigger pullback. So LQD versus IEF. That's probably a better read than the high yield junk at the moment. It's been tracking closer to sort of S&P 500. Hasn't broken down from key levels yet, but if we break this trend line here, it's probably going to look pretty negative for markets. Japanese market, it did break that 200 EMA there on increasing BBWP and momentum pretty well to the downside. So that doesn't look great because I would expect it to sort of break out of this range, which it's tried to break down from quite a few times. It's tried to break above it quite a few times as well. But with this sort of momentum setup and such a big coil on this thing, we could go pretty hard to the downside, which would be suggestive of a bigger move across markets. UK markets still pulling back. Again, potential bounce on this trend line. Hang Seng, big candle close on the Hang Seng. That's very interesting. It looks like it wants that 24,700-ish level. Kind of expect this market to pull back at that point. German market is pulling back at the same time. And it's probably got a fair bit to come as well. So going to be a key level to look out for this trend line. That's nearly a 10% pullback from the top just to get to that. I suspect this trend line is probably going to be the one that it hits though before it bottoms, which seems nuts, like a 10% pullback and barely back into December last year, 3 months. That's just been a insane pump on a market where the economy seems to be trash at the moment. VIX 1 day, yeah, as we said, this is something to definitely look at. We invert this chart, suggesting continuation, and it broke. I don't know why I had that as a trend line, but probably should have been more like that. But the fact we've broken a couple of different trend lines through here that I had, not great. Could get a bounce. That's an interesting level to bounce from. But again, I'd expect rejection off these levels. We haven't had like a decent flush of this thing for a while. All right. So as long as that's still to the downside, then SPY's probably still going to the downside. Skew, just to invert that. So skew's getting slammed as well. We pointed that out the other day. Continuation is likely. And it's coming off a pretty decent high. So be looking for some support around here. what we don't want to see is, like, if you're a bull and you expect a bounce here and your all-time highs relatively soon, you want to see a bounce relatively soon on this, on the skew, potentially even off that level there. And you want to see a new high. If we put in a lower high here and we break down out through these levels and we start putting in multiple lower highs, then the market might still be going sideways, but it's a pretty good sign that we've peaked. VIX obviously spiked, no real surprise there. Hasn't hit any key levels though, so you kind of expect the VIX to keep going. Could be a decent buy around the 23 on the VIX to buy the market, but I kind of expect this to go a little bit further than that, at least up into the 30s before we get a decent bounce. DJI, massive drop there, looking like a double top, which if that plays out as a double top, everything's kind of suggesting that it would, then you're looking at 38,755 on DJI, which would be about a 14% drop. So DJI versus gold broke a key level as well. It broke that on the Wednesday, my Thursday, US Wednesday. So again, we were watching that. That breakdown has led to a drop in the market. So these are the charts that give you that little bit of an edge. Like you can see it a day or two in advance. It's just trusting them's the tricky bit sometimes. Again, this one here, it sort of pulled up and rejected off that. It actually rejected a day earlier than that, so Tuesday my time, Monday US time. So that is probably going to lead to a bit more downside. What we want to see is a decent bounce on this and breaking key levels if you're looking for a rebound on the markets. All right, I think that's covered most of it. A little bit of a different, copper. So Dr. Copper, again, it was sort of rejecting key levels and pulling back pretty hard, suggesting the market probably wants a little bit more. Yeah, it's got a key level, probably a day or two away. So we could see that bounce sort of midweek. I'm not expecting huge bounce, as I said, but should get something around this support. If we break straight through that support level, then it's probably going to keep going and the markets will keep dropping. Silver's still technically holding this trend line, but as I said, I sold out of this as well in my super account. Just not convinced that if the economy is going shit, silver will probably do the same. All right, I think that's about it. Japanese yen. That'll be interesting to see if it finds some resistance there. Euro's getting a bit of resistance at it. This level as well. Only a little bit so far. I think it should at least hit that 50 MA on the daily. We'll probably break through it, to be honest. Oh, quick look at ETH, because Ethereum has been going a lot better than Bitcoin, and Ethereum's actually broken through this key level here. So if we close above that today, I'd expect at least a test of this trend line. Would have been great if we at least wicked up into that today, I think. But so Ethereum's actually BBWP is expanding, momentum's to the upside. This could actually be the run that everyone's been waiting for on Ethereum, which Bitcoin would not necessarily go as hard, but should at least follow. And there is a big ass vector candle in here. I'm expect like if Ethereum breaks this trend line, then 30.86, 30.80 is target there. I'd expect some resistance at that level though, unless this is Ethereum's like just breakout, look at me moment. And it looks like Ethereum versus BTC longs. These guys are finally starting to take a little bit of profit. This has just been nuts, this run up. Just remember, like, this one here isn't necessarily a predictor that Ethereum's going to go nuts compared to Bitcoin. Just because these guys lost so much money. They closed out all their positions mostly in a loss. And Ethereum BTC has had an uptick. Little one. Certainly not out of its downward trend yet, but positive signs for Ethereum at the moment. And that's about the only one that's really got a proper positive sign happening. BTC USD2. So look, that's pretty much where things are at. Looks like we're getting resistance at the 50 EMA here on Bitcoin. Cumulative volume delta's still got some momentum to the upside, but it is flattening off here. Kind of expecting a little bit more downside on Bitcoin, which if that drags Ethereum down, then that won't be great. I'll have a quick look at Bitcoin longs. So yeah, they've definitely flattened off at the moment. I'd expect them to be actually increasing at these levels on Bitcoin, but they're not. So I have a funny feeling they took some profit on this little run up and they're just waiting for the next leg down to start loading up again. That's not a great sign. Shorts are actually dropping off a little bit. Still at elevated levels, but people are taking some profit on their shorts. What was the other thing? I want to have a look at Sol. On chart. So Sol's well below its value area low here. And it's not looking great. It's not looking too bad though. Like if Sol just comes back into sort of 157-ish, 158, it should get a bounce from that level, I think. Like another couple of days down on Bitcoin and Sol wouldn't surprise me. Ethereum's really, like Ethereum and Tron. Tron's had a little uptick. It's doing better than Bitcoin. That to me looks like it actually may go pretty well. But tough to say before we sort of break out, really. You at least want to be closing above this high here at basically 25 cents. Got a pretty nasty wick at the down to about 19 cents though as well. So bit of a coin flip at the moment. There are a couple that are looking better than Bitcoin, which could be a little mini alt season, but again, I'm just overall the stock market looks shit and Bitcoin hasn't been around through like a .com bust or even the GFC, Bitcoin happened after the GFC hit. So something we've got to be a bit careful of at the moment. See, people are saying people are going to rush into Bitcoin because the markets are dropping and it's safe money and all that kind of stuff. Not sure. Because gold pulls back typically as well. All right. So key levels. Generally, I think at least another day or two down on stock market. So potentially another day or two down on Bitcoin. Ethereum may buck that trend. It hasn't really broken. Like it broke one key level, but the next key level is pretty close above. So, but yeah, Bitcoin doesn't look great. We just need to see some proper sort of momentum, proper candle to the upside. Not seeing that. Litecoin's probably looking similar to ETH, probably better than Bitcoin at the moment. What sort of trend lines we got through here, actually? Yeah, it's an interesting one. Litecoin, it's finding resistance at the 1 hour 50. But again, there's some vectors up here. It could actually try for an upside move. Litecoin's a weird one. If Bitcoin drops hard, then Litecoin will most likely drop hard with it. It might even lead the way. Just be aware of that. Maybe keep Litecoin on your charts. If it breaks this level, look out below for Bitcoin. So again, I'm leaning more towards downside on Bitcoin and markets at the moment. I need to see decent closures and decent turnaround on at least the 9 and the 13 on the hourly, and then the daily. Ideally, if we can do that and BBWP's reset on the daily, then yeah, happy days to the upside. But at this stage, looking like a bit lower, at least 91. There's a lot of liquidity down around 91, which seems like a long way away. But yeah, it's not a great setup. But we've been flip-flopping on the momentum in this whole range, so it's just need to see some confirmation either way. All right, that's been a long one. I'll talk to you later.